shares in Asia mixed at this particular point as markets in mainland China and Hong Kong struggling to recover from losses seen earlier in the week. The Shanghai Composite in mainland China closing 1.1% lower and Hong Kong's Hang Seng Index slipping about 0.6%. Gold holding near a 19-month high following a ban on Russian imports. And we're going to put that graph for you on screen, both the graph for gold and oil. And this is on the back of mounting concerns over inflation and economic growth boosting demand for the safe haven asset billion, gaining their 12% this year and is closing in on a record as investors seek a store of value amid the threat of an inflationary shock to the global economy. But we're also seeing palladium advancing about 1.8% on concerns over potential supply disruptions as Russia produces about 40% of the metal that is mined globally. Silver and platinum are both trading near the June highs. But to give us some perspective in terms of how all of this is playing out with our local markets and also to digest, I suppose, from a research point of view, how some of the local companies that have released results this morning are faring. We are joined by Chantal Marks, who is the head of research at F&B Wealth and Investment. Chantal, thank you so much for your time. I mean, we were having a conversation with Mark Davies just a little bit earlier on, the CFO at Nedbank, and he talked quite a lot about the operational environment, touching on what is going on globally. And I have to then ask you, somebody who, is looking at the stuff daily, how is our local market reacting to the news that the U.S. will be banning Russian imports of oil?
Exceptionally well, but I don't think that that's necessarily the reason why the market is doing exceptionally well today. I think that there definitely is an element of bottom picking going on at the moment. Our shares on the JSE have been sold down significantly, particularly the resources sector and some of our industrial counters as well. And there does seem to be a little bit of a comeback on the cards, especially if you look at some of these kind of heavyweight companies like Naspers and Prosus that have been under so much pressure in the wake of not only the Russia-Ukraine story, but also fears over rising interest rates globally, probably since the middle of last year.
Before we talk about what's happening on the commodity side and in particular oil, we had MTN and Nedbank, as I mentioned, releasing their financials. Which of the two caught your attention?
Oh, both of them caught my attention. Both were made for very interesting reading. But perhaps MTN stood out just because of what it is doing with its cash, or what it's decided to do with its cash. So MTN is ticking along nicely. Data adoption is increasing across most of the geographies in which it operates. The fintech business is doing well. They are printing cash at the moment. And they've opted to start paying down debt, or to pay down debt more aggressively rather than returning that cash back to shareholders. So a massive debate now at the moment over whether or not that is the right call, because investors do want cash. They do want those dividends, and they were expecting those dividends from MTN. But MTN, I think, erring on the side of caution, rather delevering and making their balance sheets a lot stronger. And it's probably the right call given where we are and what the state of the world is currently.
So let's talk about, that ban by the U.S. of Russian imports. I mean, are you expecting a price reverberation across markets, or is this a case where the news is finally, or rather the price is finally catching up with the rumors that we were hearing over the past couple of days that the U.S. might actually do this thing on their own?
Yeah, so I do think that the price already reflects limitations in terms of the movement of Russian oil. With the US, it's actually quite interesting because the US is self-sufficient, right? So they don't actually need Russian oil. It's more symbolic from the US's perspective, probably less so from the UK. But I think that the pressure point is going to be what the rest of continental Europe is going to do, in particular Germany, who are heavily dependent on Russian energy. I think things are going to get quite tricky there. But I mean, as you rightly say, the oil price has gone up significantly. So at least in part, and probably mostly, the ban on imports from Russia, or even a Russian limitation on exports, probably already reflected in the price to a certain extent.
When you look at what is happening in terms of, some of the global developments, one wonders whether the market is pricing in a recession at all. And I suppose from an investor point of view, how do you invest or how do you hedge against some of the risks that are playing out right now or could even potentially play out?
So at the moment, it doesn't seem as if markets are pricing in a recession per se, but they are pricing in lower growth, and that lower growth could combine with higher inflation to form what we call a stagflationary scenario. So that is when growth is slowing down and inflation is accelerating, which means that everything's still expanding, but when you take into account inflation, it's expanding at a very slow pace or even standing still. And I think that that's what markets are most concerned about right now. Remember, we still have a pretty undemanding base that we're working off of. Even in the South African context, if you looked at GDP numbers yesterday, we're still not fully back at 2019 levels. We are getting there, but there's still a recovery that is taking place from COVID-19, and that should at least aid in us getting some growth, which is why I don't think the market has reacted even more negatively to the shock.
Outside of the Russia-Ukraine tensions, what else are you paying attention to?
So it's been exceptionally interesting on the market, and as I mentioned at the start, there's definitely a bit of a shift in dynamic today. So the market is up quite nicely, reacting quite positively to the story. And I think that you're starting to see a bit of a rotation by investors out of the stocks that have done very well the last 2 weeks, mainly your commodity and resources stocks, into areas of the market that have been very much unloved over the last few weeks. And that's probably a good time to start doing that. Of course, it could reverse if we start seeing more drama around it. But yeah, just interesting to see the platinum's down 10%,
right,
and the likes of Quilter up 12.
All right, Chantal, let's leave it there. Thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment.